Hi, and welcome to another daily recap. So, today I'm going to recap day 153 and it's December 6, 2024. So, starting off with the fundamentals, we are having three high impact news at 1:30 p.m. today, and those three are very volatile and highly liquid newses which can make the market move upside down. So, starting off with the euro dollar, as usual, with in the daily time frame. The swing structure is bullish and the internal is bearish. Here you can also see the internal is bearish and the price at chalk bearish. So zooming in for more clear and to get more information from the daily structure, you can see the price at swept the buy side liquidity and it had chalk bearish and it has made a DXY SMP a bullish SMP divergence with the help of DXY, and now price can liquidate the buy side liquidity. Why? It has just liquidated the sell side liquidity with a bullish SMP divergence. Again, it had liquidated the short term sell side liquidity. Now it can target the major buy side liquidity pool, which is this buy side liquidity. But again, the bias is neutral because this is a supply that is holding the price. So still, though the supply is being mitigated multiple times, it is still holding. Probably price can push down after taking this buy side liquidity. So we can't say anything about that one. So buy side liquidity above a bullish week plus multiple mitigations of the supply. So supply can fail. At the same time, supply can hold after we take the buy side liquidity, and the previous day high has been swept, so we can expect some bearish momentum kicking in. So zooming in to the lower time frames, here we come to the 4-hour chart where we can see the swing structure is bearish, internal is also bearish, and price had reached the premium prices of this internal high. I'm expecting this strong internal high to hold and push the price down to take out the weak internal low. But from the daily perspective, we can say that this strong swing high can be taken out because this supply has been mitigated multiple times. So you can see 1, 2, and this is the third time that this demand has been mitigated. This supply has been mitigated. So this supply has a lot of chance to be failed. So again, if I zoom in here, you can see one thing to note: this supply has been mitigated multiple times. So I just noted that one, and price is consolidating in 4-hour with no clear directional bias. So price just took the buy side liquidity, and again it's just consolidating. So it never took out any sell side liquidities. So here we go with the H1, which is my main medium time frame. The swing structure is bearish and internal is bullish. The price is in the premium phase. Anytime the run phase could start and the price can push down. But with the current high time frame setup, I'm expecting the price to make a bullish IBOS and change the market structure to bullish. So zooming in, what we can see is that the price had taken out the previous day high, which is also an equal high and which is also the New York high. So all I can expect is the price to chalk bearish. If the price chalks bearish, then I can confirm that the momentum has shifted bearish and I can expect the price to make a kind of pullback before the price makes actual move up. So since I'm using much lower time frame than the H1, I can get my quick 2.5 hour and then before the market changes its bias. So price of the previous day high liquidity, thus shorts would be valid if the price chalks bearish. Also, if the price chalks bearish, then I can assume that the London can form the high of the day and would be highly confident in taking the shorts. And again, on this day, I didn't trade London session. I traded only New York session because I was not available during the London session. So one thing to note is that this low failed to take out the high. Now, if the price chalked bearish, I would not hesitate to go for shorts. Yeah, actually, this is actually a weak low because this low failed to take out this high, which means this low is weak. And if the price chalks bearish, then there is a lot of chance that this low can be taken out and at least this fair value can that at least I can have 50% mitigation of this fair value gap. So shorts are now becoming high probability, and with an SMT divergence from GU, shorts become much more high probability at 13. Okay, I think I didn't trade after this one. So let me quickly show you what happened on this day. So this is December 6th, right? Yeah. Let's jump into December 6th. Okay. Let's jump to H1. Here we go, December 6th. December 9, December 6. Here we go. Yeah. At this time, at 13, what we saw there was that the price was a bit consolidating. So exactly at 13:30, price just took. This was the 13 candle, and start of the 13 candle, 13:1. So at 13:30, this candle became like this. So it disrupted the entire market, and it made a bullish IBOS, and it did not, and it made a chalk bearish after the New York has been completed. So I was not able to capitalize on this trade. You know why? Because it was the end of the trading session. So I should have ended up with an EOD, but I left the desk as soon as the price got disrupted. So yeah, it is what it is. Like, you can skip these days because you definitely know either you will not get any trades. Even if you get any trades, probably you will be either stopped out, or if the price moves in your direction, then it's well and good. But probably if you get stopped out, then you will lose more than you intend. So that would be psychologically affecting. So it's better to stay off on these days, but you can still trade on these days just to understand the fundamentals, how they work on the market real time. This will enhance your understanding about the pair that you're trading with. So moving into GU on the daily time frame, the swing structure is bullish, internal is bullish, price had mitigated into this demand with a strong rejection. Zooming in, you can see that there is an unmitigated demand here, and also there is an unmitigated demand here. So obviously price can push down using this as an inducement to mitigate into this demand. But for now, what I can say is I can expect this demand to hold and push the price up. So currently price had swept this buy side liquidity and mitigated into this fair value gap. So what I can expect, price can push down to take out some internal resistance liquidity, which I can say that this could be the internal resistance liquidity. Or if you zoom in into the lower time frames, this could be a lower time frame sell side liquidity, which the price can take out before pushing up. So in the 4-hour, the swing structure is bearish, internal is bullish, and here ton of low resistance liquidity is being formed, which you can see from the zoomed out picture itself. So price swept this buy side liquidity, also the current buy side liquidity, and if the price chalks bearish, then shorts would be valid until it takes this sell side liquidity. So once the price takes a sell side liquidity and mitigates into this 4-hour demand, then probably we can expect a shift in the market structure. Coming to H1, you can see the swing structure is bullish, internal is bullish. So this is not a market structure, it's just a liquidity sweep. For me, longs and shorts both are valid, because for the longs would be phase A2, and since the price is not reacting from anything to the left, I can still look for longs targeting this 4-hour supply above. So if the price taps into this 4-hour supply, then phase A2 longs would be low probability and phase D shorts would be medium to high probability. So that's what I was thinking about. So this is an partially mitigated demand where I can expect the price to mitigate and then chalk bullish for me to take shorts, for me to take longs. So yeah, but there is also another demand right here where I can look for the price to mitigate into and then push the price up. But the caveat here is price at swept the buy side liquidity, and this leg does not have any inducement, and the only inducement present is just below this POI, which is this one. So probably this POI can act as an inducement for this demand, and the price can mitigate into this and push the price up. At 13, price almost mitigated into this POI, but it mitigated this entire what do you say, that demand order flow, and then it it got rallied up. So I was not trading the London session, so it was not of my concern. I was trading only the New York session. At New York session, price with this momentum, started to push up and mitigated into the 4-hour supply. So now what I can expect is, price to chalk bearish, and then I can look for shorts. So did that happen? So let's check that out using the GU chart. So December 6 at 6. Okay, here we go. Price actually chalk bearish right here. So this is the chalk bearish line. So did it chalk bearish within the session? No. Yeah, it did chalk bearish exactly at 3 p.m. So after 3 p.m., I am not going to trade. So even if I am sitting after 3 p.m., price did not mitigate into this supply. So which means I didn't take any trades on this day. So it's as simple as that. So yeah, that's it from my side. There is no trades on both EU as well as GU, because if there is an high impact news, that will cause a dramatic shift in the market and probably I won't get any trades. That is very common and I got used to that one. So most often I recommend you guys not to trade on these days, because once you sit on the chart for 6 hours, you will your mind will be thinking, I sat for 6 hours, so I must take some trades, and you will get involved on 4 more trades and you will lose your money. So what I advise is that once you become experienced, once you have that patience mindset, then you can sit on these days just to learn how the market works during the fundamental news. So if not, you can just skip these days and use the trading view recap to recap what happened on this day. Suppose if you get any trades, you can just journal it. So you can analyze how you can maximize your profit potential during news hours. So if you are having a positive profit factor, then you can implement that in the live. So before that, never ever trade during the news. So yeah, that's it from my side today. See you guys on next day. Until then, cheers guys. Bye.